Hi everyone, this is Deepali here from first year MMS. So today we will talk on the topic of final accounts. First of all, I would like to thank Professor Deepak Nair for giving us an opportunity to speak on the topic final account. So let's start. Here is the content which I have added in the slide, and about all the contents we will study in brief, like what are the trading account, profit and loss, what is balance sheet, what is final account. So now, final account refers to the financial statements that summarize a company's financial performance over a specific period, typically a year. Means in a company where you're working, so there are particular statements uh, in the accounts department where you can see that all the liabilities and assets, the trading account, the profit and loss, how much company has spent its expenses, and how much profit and loss has been done to the company, and how much company has gained. So all that we can see in the financial statements of the company's final accounts part. So let's see that trading account, profit and loss, and balance sheet, what it means in brief. So there are two types of expenses mostly in the company. First is direct expense, second is indirect expense. So what are direct expense? So in a factory or in a company, there is carriage inward, like whatever we receive from outside, the wages, the power. Expenses which we do directly are the direct expenses. Second is indirect expenses. Indirect expenses, we choose the option of trading account, and in indirect expenses, whatever the expenses spend, uh, like from the factory, like salaries, the electricity, whatever the salary which we give to the employee, that expense, and the amount which we pay for the electricity bills, that is indirect expenses. So in this, we use the method of profit and loss account. Next is trading account. So trading account, it shows the overall results of purchasing and selling of goods. Whatever goods we are purchasing from a vendor and whatever goods we are selling to the party. So it includes the results of all that. So it also includes all the direct expenses incurred in the business. Here you can see the example of direct and indirect. In trading account, direct expenses used in the business. It provides gross profit earned by the business, like whatever profit we have earned, that information it gives. If total sales is greater than total purchase, and it provides gross loss suffered by the business if total sales is less than total purchase. If the sale is, suppose we have bought something from the vendor, and that price is, we have bought it for so and so money, which is more, and we have done sale of less price of that, then there will be a loss to the company. So this is the format of trading account. We can see the particulars on left side and right side. Left side is a debit part, right side is a credit part. We can see the opening stock, which refers to the goods left unsold at the beginning. Means the goods which we have not sold while beginning the current account, that is the opening stock. Next is purchases. So it refers to the total cost of goods purchased both in cash and credit in case if purchase is returned. So first net price is computed by deducting purchase returns from purchase, and the result is then debited to the trading account. It refers to the amount paid to the workers for manufacturing or loading and unloading purpose. Customs and import duty, it is the expense paid to customs and import duty when the goods are purchased from outside the country. Whatever goods are purchased from outside, they include in the trading account, like it is in the direct expense part. Next is royalty. So no, sorry, carriage expense. So it refers to direct expense which are incurred while transferring the purchased goods directly into the factory. So these expenses are also uh, uh, known as the freight in or carriage in or cartridge. Okay, next is royalty. So it refers to the amount paid to the owner for using his rights. We give direct expense to the owner, directly we give it. Manufacturing expenses, so these expenses are spent on gas, electricity, water and fuel to run the factory. Packing expenses, this amount is paid to the uh, to uh, to the people, like for packing the purchased goods to bring them to the factory. Next is credit part. By sales and by closing stock. By sales, it refers to the total cost of goods sold, both in cash and credit. Okay, so in case of sales return, then what happens was the net sales is computed by deducting the sales returns from total sales total sales, and the result is then credited to the trading account. Next is closing stock. It refers to the total cost of the goods that are left unsold at the end of the accounting period. Next is profit and loss. So profit and loss account shows all incomes and indirect expenses related to business. Whatever income we have got and whatever expense like which we have spent outside, you know, of business, then that counts in the profit and loss account. So indirect expense include, like for example, if we want to buy some stationery items for the company, then what happens, we will order them, and whatever expense we are getting from that, so we will pay the amount. So that comes in the indirect expenses, which include administrative, selling and distribution expenses that are required for the operation of business. Next, profit and loss account provides net profit earned or net loss suffered by the business. Whatever profit we have earned, whatever loss company has suffered, that profit and loss accounts counts. Okay, so same like trading account, we have the particulars in profit and loss. There is debit part and there is credit part. So let's see the gross loss. So it is transferred directly from the trading account. Salaries, it refers to the amount paid to the employees as the salaries. Rent, it refers to the rent paid as interest on loans. Commission, this is the amount paid as commission to the agents. Now advertisement, suppose whatever advertisement, if you are having a manufacturing company, so you have to advertise the product through various media, like posters you need or social media you need. So for that, the amount is spent. Now, bad debts. So it refers to the amount which is not paid by the debtors to whom the goods were sold on credit. Discount, it refers to the amount which is reduced from the list price of goods, whomever we can give discount. So that particulars are mentioned. On the right hand side, credit side by gross profit. So it is transferred directly from the trading account. Interest received, it is the amount received as interest on investments. Commission received, if we are giving a business to someone, then the commission which we receive is the commission received in the particular parts. Next is manufacturing account. It is a special account which is prepared only when the business is engaged in manufacturing of goods. So it provides the cost of goods manufactured during a given accounting period. So in case of manufacturer, the manufacturing account should be prepared prior to the preparation of trading account and profit and loss. So whatever thing, like if a business is engaged in some manufacturing of goods, then this account should be done or made before trading and profit and loss account, so that you should be ready of all the details. These are the particulars, work in progress. This particular should be mentioned in the format which we have made. Now, balance sheet, the most important thing in the final account. It is a financial statement that states the financial position of the business. So it lists the assets and liabilities, like what are the assets which you gonna use to sell that products. Okay, so we will discuss about like which assets you can use and what are the liabilities. So there are two orders, liquidity order and permanency order. So this is the format of balance sheet. Liabilities, in liabilities we can consider bank overdraft, outstanding expenses, whatever expenses remaining to pay, bills payable, sundry creditors, long-term loans, and capital. In the assets part, cash in hand, cash at bank, prepaid expenses, bill receivables, sundry debtors, closing stock, raw materials, work in progress, finished goods, plant and machinery. All these amounts, like all these particulars, should be mentioned in the format of the balance sheet, and so amount should be written in that. So this is the format of balance sheet. So let's see the examples of final account. So final account include income statement, balance sheet, statement of cash flows. Okay, so now in this we can see, like these are the little examples which I have given. So in income statement we can see that it is also known as a profit and loss statement. So the income statement summarizes an organization's revenue, expenses, what company gains and losses over a specific period of time. Next is balance sheet. In the balance sheet, it summarizes an organization's assets, liabilities, and equity at a specific point in time, usually the end of the fiscal year. So the balance sheet provides an overview of the organization's financial position, including its total assets, total liabilities, and net worth. Statement of cash flows. So the statement of cash flows show the cash flows and outflows of an organization over a specific period of time. So the statement of cash flows provide information about the organization's cash flows activities, including operations. Okay, so these are the examples of final accounts which we have seen. So by this we can conclude that how a statement, final statement is necessary for a company to run. So if we do not have these final statements, we will not know that how much the company is in profit or how much it is in loss. So that's why trading account, manufacturing account, and invoices and balance sheet and profit and loss account is necessary, and to have that format and the particulars to be mentioned and how much the amount is mentioned, that all the details are necessary for a final accounts to be included. So this is what we have studied in brief. So thank you so much for watching this presentation. I hope